Welcome to Women Wealth and Entrepreneurship Podcast with Ariel Shaw, MBA. We want to increase your bottom line and create generational wealth that lasts way beyond you. It's 2025 and we are in season 6. Wow, how exciting! This is the year of focus and continued expansion. Our 2025 media participants include Sylvia Dennis-Wray of Sylvia the Advocate, Mica Johnson of Mica Johnson State Farm Insurance Agency, Shamica Davis of JTS Vacations LLC, and LaQuita Brooks of the Motivational Maven. We are excited about your future. Thank you again for joining Women Wealth and Entrepreneurship Podcast with Ariel Shaw, founder and president of Southern Crescent Women in Business. And we're starting off with wealthy habits to help you win this year. And we have the pleasure of having Kim Mays of Kim Mays State Farm Agencies. And I'll let her talk a little bit about that in a moment. But again, we want to have people understand the vehicles that are available now. Because the time is now. I do realize we have a tendency to wait till the right time or put it off. This is not that season, and I'm hoping you receive that. This is not that season to wait. So, Kim, tell everybody who you are.
So good morning, everyone. I see some familiar ladies. Nice to see you guys. I am Kim Mays. I am the owner of Kim Mays State Farm Agencies. Just opened second location in December of 2024. Absolutely blessed to have been able to have that opportunity. Started in insurance in 2019. Went into insurance because I thought it would be a good opportunity for what Kim Mays can do. Once I got into insurance, my eyes were open very wide to what this business actually was about and what insurance can do. I recently... So State Farm, we're insurance and financial services. Everybody knows us for our auto and home insurance, but they're really starting to lean into the financial services part. So I recently acquired all of my securities license to include my CHFC, which is a Chartered Financial Consultant designation, so that I could help people talk about wealth and what does this mean? So it's very eye-opening once I got into this business to kind of see what people were doing with insurance and what counterparts were doing and how they were using it, how they were leveraging it. And so my hope, wish, and drive and desire is to provide what I know, what I've learned, what I've seen to others to help educate them. So I did come up with a couple of things, but Ariel, I'm going to dive right into... I did not see Candy's video, but I can probably guess what she's specifically talking about. So I'm going to dive into that. If you guys have any questions, please feel free to drop them in the chat. Ariel, if you see some stuff, or raise your hand. I'm very conversationalist, and I know people are going to have questions. So what is Candy talking about? Putting money away into her child's, was it a life insurance policy for her child, I assume?
Yes. And just context, guys, for those that are jumping in, Candy Burris mentioned how she was able to acquire the amount of wealth that she had, and instead of spending, of course, she was living below her means, but she also mentioned how she was taking a portion of that and adding it into policies, a cash policy, and was also then teaching her daughter to do the same.
Yeah. So what a lot of people don't realize, and this is a life insurance policy. So here is what a lot of people do not understand about life insurance. There are two types of life insurance. There is term life insurance and there is permanent life insurance. Term life insurance, I can get a lot of insurance for a little amount of money, but it only lasts for a certain amount of time. And what I hear over and over and over again is, oh, I've got life insurance on my job. What you have on your job is term or group life insurance. It has a 98% rate of actually paying out. If you leave your job or your job leaves you, you do not have that life insurance policy. Okay. I consider insurance at work icing on the cake, but it is not game changer. It is not a game changer strategy, in my opinion. We do sell term life insurance, and I think that term life insurance does have a purpose. Buying it directly, like outside of your job, you own the policy. Okay, if you think about it, your job kind of owns what they're offering you. If you get it outside of your job, you own the policy. So now let's talk about permanent insurance. Permanent insurance does cost more, but what we like about it is it never expires. Okay, there's no end date to it until the claim is made. And because of that, you are paying premiums into that policy. And that money inside of that policy is actually growing. So how insurance works is people pay their premiums, the insurance companies take that money, they invest that money, which is how they're able to have money to pay all of these claims. In situations, they take the investment and they will give a portion of the gains to the customers. You may hear dividends or this, that, and the other. So our permanent life insurance policies, permanent here today, here till the claim is made, carry cash value inside of them. Okay, I know you've heard on the internet, it's like a bank. Okay, so you can think of it like a bank. You're putting money into this life insurance policy, and if you need access to the money, you can borrow it if you would like. You can borrow it and pay it back if you want to. You can borrow it and not pay it back if you didn't want to. If you don't pay it back, then it decreases your death benefit. So if you have $100,000, you borrow 20, you pass away, $80,000 would go to your beneficiary. The beauty, and I used to sell real estate. So a lot of people could not buy houses because they did not have access to money. They did not have down payment money. Money inside of your life insurance policy, you do not have to qualify for. We don't have to do a credit check. We don't have to know, did you pay your taxes? I don't even have to know what you need it for. It's your money. You can come and get it. And a lot of people don't even realize how easy it takes to come and get that money. In my office, anything under $10,000, I can cut a check in 5 minutes. So it's actually better than the bank. The money that you're putting inside the policy is actually going to grow greater than a bank. So you're going to have a bigger return on your money. Worst case scenario, you pass away. Now your family gets the death benefit. And so what a lot of people don't realize about insurance, it's an aleatory contract, okay? So aleatory, you put in a small portion of money, but the insurance company is willing to pay out a larger portion of money. I tease people that a life insurance claim is the one claim that you are going to make, okay? It is going to happen. And when you put your premiums in, you're never going to if I have a $300,000 policy, you're never going to put $300,000 into this policy. Is permanent insurance part of Infinite Bank, or is that something totally different? Yes. So people call it different things. I'll tell you, all this stuff on the internet, people come up with all this creativity, right? We come up with the creativity to make it sound like it's something new, okay? Infinite Bank, cash value, same thing. But somebody came up with the word and it sounds very catchy and it sounds new, so that's what they call it, okay? Permanent life insurance, it's got money in it, period. No need to complicate it. But you're never going to put, if you have a $300,000 policy, you're never going to put $300,000 in the policy. Never. In our case, even if you did put $300,000 in it, the death benefit is probably $400,000. Does that make sense? So you're never going to put more money into this policy. A lot of my customers and people say, I'm going to save. I'm just going to save the money, or like Ariel said, I'm going to work hard and then I'll have the money. You're not. The reality is you could put money into a life insurance policy. You could put $10, $20, whatever. And like I said, if you pass away, now your family has $100,000. That sounds like a great deal, right? Sounds almost too good to be true, but it is true. It is very true. It happens. It happens all day. Now, in Candy's case, if her strategy was to put money into her daughter's policy, that means her daughter, Candy, is insuring her daughter's life, okay? I do it on my daughter's life because my daughter is younger. My daughter is healthier. The premium for my daughter is going to be less expensive than it is going to be for me. However, I have policies on my boys. They're 18 and 19. However, I am the owner of the policy. So Candy is the owner of the policy. She controls the money. She controls being able to withdraw money out of the policy. She controls the beneficiaries of the policy. So I would assume that her strategy, the reason why she did it for her daughter, was that the premium was cheaper for her. And not only that, is if something happened to her daughter, she would have that death benefit. And then she is now setting her grandchildren up, right? Because if Candy passes away, that policy is there. It's in force. It's not going anywhere as long as the premiums are paid. And then when her daughter has children and her daughter passes away, because the policy is on her daughter's life, then the money will go to her grandchildren. Does that make sense?
Yes.
Now, at State Farm, we have what's very popular for our children are our limited pay policies. And so you pay them for a limited amount of time, 10 years, 15 years, or 20 years. And once you've put money into that policy for that amount of time, no more premiums are collected. The policy is never going to expire because it's paid up. The policy is going to continue to grow. And I can show, if you guys want to reach out and do some individual appointments, I can definitely show you how that works. But the policy will continue to grow and you are not putting any money into the policy. So it is, go ahead.
Is that limited policy also a whole policy?
Okay. So you use the word whole. So let's go back to insurance. There are two types: term insurance and permanent insurance. Whole life insurance is a type of permanent insurance. Okay. Limited pay life insurance is a type of permanent insurance. Did that answer the question? So a limited pay is not a whole life policy. you think about it, limited pay, you pay it for a limited amount of time.
Right.
Whole life, you pay your whole life.
And the one that has the cash is only whole.
Permanent. So 2 types, term insurance and permanent insurance. Under permanent insurance, there are like 5 different types of permanent insurance. Whole life is a type of permanent insurance. Anything permanent should carry cash value in it. Whole life, universal life, limited pay, index variable, all of those have cash value in them.
Gotcha. Okay, that's good to that's a good way to now I got you.
Yeah, so I say just term and perm. Just think term and term. Term and perm, right? Term, you know, temporary, permanent, and that's where the cash value.
So when we start talking about the permanent, and you mentioned a couple others that are under that particular umbrella, can you mention that index or talk a little bit about that?
Yeah, so an index universal life, anything index or variable, think market, think maybe non-guaranteed, and think aggressive. So you know, in talking about wealth, and when I sit down with customers, understanding somebody's risk tolerance is important in determining which type of product that they're going to pick. So someone who has an index UL or a variable UL would be more of my risk takers, very aggressive. I would not recommend that until we've got other fixed, guaranteed items in place, if that makes sense. But same strategy. It has cash value in it. You know, it just has a greater risk to it.
So when you say greater risk, we always say greater risk, greater reward. So does that mean that it pays out more? It grows quicker. So, and your recommendation would always be, okay, make sure you have just your regular perm, you know, policy. But if you are an aggressive individual, or you're, you know, want to increase some things pretty quickly, you can also then get this in addition to that.
Right.
And it goes into the market.
Right. It's market based. So to say that it's going to grow aggressively, it just depends on what the market is doing. It can also dive aggressively, if that makes sense. And so that's why my advice is to make sure that you've got other fixed, secured, guaranteed things in place before we pull in one of those type of products, if that makes any sense.
It does. One of the questions is it recommended to do term or whole for children? Do the premiums stay the same if you do whole life? I don't know if you answered that already with
I did not.
Okay.
Yep, I did not. So whole life policies, premiums stay level the whole life of the policy. I personally, if you think about it, if I'm going to do a child and I am saying they are paying for this their whole life. So if I get it for a child who is 8 years old and they pass away till 100, they have to, those premiums have to be paid every month or every year of their life, if that makes any sense. I personally, I like to know that it's paid. So I prefer the limited pay policies, because once you pass away, the child will then become the owner of the policy. So now, if you started this whole life policy and perhaps didn't educate your child about this policy, and they're getting this bill for this life insurance, they may not pay it. And should they not pay it, should they not pay it, then the policy could potentially lapse, if that makes any sense. It's a little deeper. The cash value is going to pay the policy till it goes away. But however, whole life policies, because you are paying it your whole life, can be the growth in the policy can be more because of that, because you're paying it your whole life. But if I'm going to do a policy for a child, I would share the two, a whole life and a limited pay comparison, and do that side by side, and then let the consumer decide. But I would caveat, like I said, once you're gone, the policy goes over to the child, and the child needs to understand, if it's a whole life, that the policy needs to be paid to keep it in force.
But Kim, whole life and limited pay, they're still under the permanent side.
Correct.
I think what she's asking is it a recommendation to also consider term policy? And what does that mean if you do a term policy for a child?
Right. So, okay, we can do a children's term rider on an adult policy for a child. But we do not do just the child's own term policy for any children under 18. If a child is 17 and below, we would only do a permanent life product for them. Unless it's a children's term rider, say, Ariel, you have a policy, you want to add your daughter, we do a children's term rider. That policy, very cheap, covers up to $20,000 until she is the age of 25. And then at that time, we would either do a permanent policy for her or a term. Now, an 18-year-old and older can do just a straight term policy, okay? Again, it depends on the conversation I'm having with the customer. There's nothing wrong with getting a term policy for an 18-year-old. The benefits are they have a policy. It's in force. No matter what happens to them in their health, they have coverage. And later in life, if we want to convert that term policy over to permanent insurance, we can, and they don't have to go through any underwriting. Worst case scenario, if my customer could not afford to do a permanent life insurance, I would recommend starting your child with a term if they're 18 and up, because they have something. Now, term does not have cash value in it, okay? So it is not going to be a policy that you are able to borrow money against. I want to answer this question really quickly about the Gerber life policy, and then I'll come back to what I was saying. So here's my take on Gerber Life, okay? Gerber Life is a baby food company. They cater to kids. And so you have an audience. Why not sell life insurance to this audience? But that's not what they do, right? They do baby food. So I personally would say, if you are going to invest in insurance products, you should do that with insurance companies. Or, it's like, I'm not going to go to my hairdresser and she doesn't do makeup and I'm going to tell her to do my makeup. Does that make sense? Did I answer that question, Tammy, for you, everybody?
Yeah.
Okay. The other thing with life insurance and life insurance companies and products and this, that, and the other, there's a lot of stuff that they don't tell you in it, which is you just have to watch out for that and be careful and read the fine line. So anyway, I like to do business with people that's what they're in the business of doing. Personally, I mean, I don't fault Gerber. I mean, of course, you cater to kids, so why not? But I do want to go back in talking about permanent life insurance and wealth and strategies and this, that, and the other. Uh, Life insurance policies are great for business owners, right? You're in a financial pinch, you can borrow money off of your policy. I know that for me, when I went to apply to be a State Farm agent, I had to show that I was financially solid. I could include my life insurance policies in that. Not only that, when I go to purchase property, I can include the cash value in my life insurance policies as an asset, which helps my financial strength, right? Helps them to want to give me money. And I think that's where we struggle. You know, we don't have that education piece, right? Putting your money somewhere that does multiple things for you. Um, you know, it has a death benefit. If you happen to pass away, it's an asset. It can strengthen your credit, your financial position when you try to apply for things. And then you simply have access to money um, if you need it. And I definitely think we are missing that piece. Um, does anybody have any questions? Any more? I have some other topics and things I can also discuss when it comes to wealth. But as far as life insurance, again, two types, term and perm. Term insurance, I get a lot of insurance for a little amount of money. And then permanent insurance, it costs more money, but it's going to be there for the rest of my life. Um, there's also there's a hybrid in there. I like it. It's called a return of premium term policy. I think that one is underutilized. So what happens is I put money into this policy. It has a death benefit. If I need to borrow off of it, I can borrow off of it. But at the end of the term, let's say it's a 30-year return of premium, I don't make the claim, I haven't passed away, the insurance company will return all the money you paid into the policy back to you. So a lot of people use that as a retirement strategy. So what happens is I get this term policy
Wow, I never heard of that.
Yeah, at the end of it, maybe I put $50,000 into this policy. I can then either get that $50,000 back and do whatever I want to it. We will take that $50,000, we'll dump it into a single premium permanent life insurance policy, and then have that policy pay you $2,000-$3,000 a month, however you want to set it up and structure it. Return of premium term policy. It's not as cheap as term insurance, but it's not as expensive as permanent life insurance policy. But it has the benefits of permanent life insurance policy from the aspect of being able to borrow the money or get it. And like I said, if you pass away, God forbid you pass away, life insurance transfers to your family tax-free. Did y'all know that? Yay.
Yeah.
So I've got $1 million of life insurance on me. If I pass away, my family will get $1 million and they do not have to pay taxes on that money.
So, it's so interesting. And I tell you, I don't know, y'all probably didn't hear and catch that when Kim said counterpart, but it is just so wild. And I was in a conversation with someone, and I said, listen, I may host a lot of events, and I think because of who I am and you'll tend to see people that look like me. But I said, I also go in rooms where I'm one of the only ones in that room. And I think the reason for that is because there are so many things that, you know, and I mean, we got degrees and a whole lot of other stuff, but there are just things that we weren't aware of. And I mean, just even that is a whole nother part that I've never heard of. One, it's almost like a 401 with a death benefit, almost.
Yeah, yeah.
Like,
And
what?
I see Yvette is on here, so we can talk taxes and all of that other stuff. And it's just using these different instruments. Um, you know, I think 401ks are great, especially if your company is going to do a match, but you got to understand how that money grows in there, and then um, the tax implications on that. But that's something also that's being invested. But like I said, what I love that I do this and I got the securities piece is I can have an A to Z conversation with somebody. Like I can look at everything somebody has and put a plan together for them. I did want to go back. There were a couple of questions. Yes, in State Farm's case, I cannot speak for every insurance company, but in State Farm's case, you can convert if you have a term insurance policy with us, you can convert it over to permanent insurance. You said whole life. So yes, a whole life, but permanent insurance. So Kim, where would that scenario or case happen? Somebody has a term life insurance policy. They are diagnosed with cancer. Cancer is a deniable. You can not with State Farm. You cannot get life insurance if you have cancer unless you've been in remission for 5 years. But let's say this has now happened to you, and that term is getting ready to end, but you still want to keep the life insurance. We can convert it over to permanent insurance and do not have to rate you because you now have cancer. It will only rate for your age. It will not rate for your health. So when I was talking about securing for your teens or whatever, getting that life insurance policy, a term policy, if that's what you can get, that's great. That starts them off. That reserves some life insurance space for them if their health can change. And health changes for everybody. Unfortunately, I wish I did not get calls about children passing away, people in their 20s, 30s, 40s, 50s. I mean, stuff happens to anybody at any time. So yes, you can convert that. Amount of time you pay for a return of premium. So it could be a 10-year, a 10, a 20, or a 30-year return of premium term policy based on your age. So example, our 30 years, if you're 46 and older, you cannot get a 30-year term policy. So it just depends on your age, but usually 10, 20, or 30-year, whichever one you decide.
I'm sorry. Is that the hybrid policy that you're referring to?
Right, return of premium term policy. So term policy and return of premium term both either have 10, 20, or 30-year options you can choose.
So I want to let you get to a couple of the other nuggets or tools in your package before we transition from insurance.
Okay.
So for your whole policies or permanent policies, does that require, because you said underwriting, does that require exams for the kids side as well as the adult side?
So how it works is the first thing they're going to do is we do an application. So it's based on your responses in the application. Then it's also kind of based on the type of policy that you're getting. Most of my children's policies issue like that. They don't have to do blood work. None of my children have to do blood work or underwriting. If they have some medical conditions, asthma, something like that, they may go to their doctor and ask questions. For adults, again, it depends. They're going to pull your prescription history first. I have a customer, she doesn't have any prescriptions. She's 49, just like me. Her policy issued like that. She actually got a super preferred rating. But if they do have to do what we call medical, they send someone to you, to your house, wherever it's most convenient for you, and they do height and weight, urine, and then they take some blood samples, and that's pretty much it. And then the underwriters will do their stuff on the back end, and they'll make a determination. I always tell people, hey, give it a try, see where you're at. Like I said, unfortunately, this is the one claim that you are going to make. And we talk about value with our money, right? Where are we putting our money? Are we getting, bang for our buck in the money that we're paying? So, and then lastly, yes, uses a strategy to borrow money without touching assets, tax-free, came from the accountant, permanent life policy, and return of premium policy. So it is a real thing, and people are doing it. It exists. And I'm going to tell my children when they get jobs to buy life insurance on me. Even though I have life insurance on me, I'm going to have them buy more.
Right. One quick question. So if they were to start 2025 January with a policy, how long will they need to invest in that policy before, and this is under the permanent side, not premium policy side, but the permanent side, how long before it builds cash value and they're able to actually utilize it as a wealth tool?
Yeah. So when we do the quotes or whatever, I will present an illustration. That illustration will show you how much you're putting into it, how much is in it, how much the death benefit for every year of the policy. So it will depend on how big of a policy you get, how much you're putting in there, how much money is available, depending on the type of policy. But the cash value is usually available pretty soon. However, I will tell you what this is not. This is not, I get $100,000 policy, I pay my $100 premium, and then the next month I want to go take out $1,000. It is not that. Okay. But I can show you how the cash value will grow in the policy. So it can make sense. But I have had people come to me and say, oh, well, I want to give you this much money. I want to give you $10,000 and I want to get $100,000 policy, but then I want to borrow $50,000 off of it. That's not how it works. But it is there, and we present that and show that so people can know.
All right, so we got a few minutes left. Can you talk about the other tools that you got?
So we talked a little bit about life insurance. I also want to just not go deep, but consider disability insurance. A lot of people, again, you've got disability insurance on your job. That's going to pay you 60%. A lot of people come to us. We cover the other 40% because unfortunately, if you become disabled, your bills do not go down to 60%. Okay. Disability means anything where you cannot do your job and earn a living. Your bills are not going to stop. Okay. So disability insurance is a great tool to have for wealth. Because again, if something happens to you and you cannot pay your bills, it can put you in a bigger financial situation. For those of us that are earning income, if we don't work for a company, consider doing a Roth IRA. If you do work for a company and they're doing some match, you want to invest, put your money with that 401k, get that match. consider taking another strategy we do. You have the 401k at work. We pull and start another 401k for you. The reason being is the 401k at work is being invested for the masses. Maybe your risk tolerance is a little different. So we can get a little bit more specific with your 401k and maybe growing that money a little faster or a little slower. Okay. So you can pull and start another 401k outside of your company, but keep that to get the match. Annuities, a lot of people do not know or have not heard or don't know anything about annuities, but again, another retirement strategy. It may encompass putting a lump sum of money and the money is growing and it can pay, you can decide to do a payout 10 years, 20 years, or whatever till you pass away. That can also have death benefit with it. Trying to think. Yeah, I like that. I just did one with my husband. So sometimes if I have customers and they're not able to get life insurance, we may talk about an annuity strategy that has a death benefit for them. So they have that in place. Long-term care, State Farm, we do a life insurance policy. It's a permanent policy. It's a universal life policy with a flexible care rider. I love it. It does three things in one. It has cash value, death benefit, but it also can be utilized if you need long-term care. And I bring that up. I have an elderly mother, 87. And when you are not able to take care of yourself and that burden has to fall back on your family or your kids, what does that look like? Now's the time to think about that. And so we do offer products that can help plan that. What I like about State Farm's product as opposed to just a regular long-term care product, long-term care is use it or lose it. This one is not, because again, it's doing three things in one. So several different products, options, strategies. First thing we want in anything, we want to have our savings. We want to have 3 to 6 months of emergency funds available. Okay. Second, we want to make sure our insurance is taking care of our life insurance, our disability, our auto insurance, all of that stuff is covered. And then we want to build our retirement plan and strategy. I will leave you guys with this nugget that I heard, and it really resounded with me. It was a very aha moment. And that is that retirement is about ability. It is not about age. And so if we can help our children to have the ability to position them that if they want to retire at 30, at 35, at 40, they can. You just have to start building that wealth, that pipeline for them now. And it is very possible and very doable.
And that is an amen after that. That was really good. And that was a really good note to wrap it all up and put it in a bow. Wow. So the bottom line is, if you are wanting any of these products, I strongly suggest you reach out to Kim. Kim, how do they find you?
Yes. So you may call my office. I will put it in the chat, I think. I don't know. I feel like my chat's not working.
You can say it just because we're recording.
Okay. So 770-282-6622 is my office number. I am on my emails all day long. So email is probably the fastest way to get to me. And my email address is kim@coveredbykim.com. So that's KIM@COVEREDBYKIM.com. Kim@coveredbykim.com. More than happy to, again, go deeper into these conversations, put anything together, look at what you currently have in place, and see what strategies, put things together for your children, your grandchildren. Those are my favorites, because we got to do better. We got to do better.
That's the truth. Amen. All right, guys. I hope you guys got something out of this conversation. Our wealth talks that we're doing, starting off the new year. I would say I definitely got some things. We're looking at putting together a call with my family. So I don't know what tools we can use for the entire group. That's a conversation, we can have offline. But I definitely learned a lot. And Yvette, I hear the tax strategy, so we're gonna have to get you on to these to these calls. All right, guys, y'all enjoy your Wednesday. Stay warm, play in the snow, but take y'all vitamin C.
Thank
All
you to
right, guys.
everyone.
Thank you so much, Kim.
Thank you, Ariel. All right.
Thank you,
Bye-bye.
Kim, and thank you, Ariel.
Thank
Welcome.
you. All right, bye-bye. This has been another episode of Women, Wealth, and Entrepreneurship Podcast. Thank you so much for joining us today. Again, I am Ariel Shaw, your host of Women, Wealth, and Entrepreneurship. And again, our media participants include Sylvia Dennis-Wray of Sylvia, The Advocate, Mica Johnson of the Mica Johnson State Farm Agency, Shamica Davis of JTS Vacations LLC, and LaQuita Brooks of the Motivational Maven. Thank you again for joining us. I hope you had an amazing experience.